Federal Reserve officials broadly agree the gradual pullback or taper of its monetary stimulus is necessary. What is less clear is exactly how the central bank will decide to control interest rates when the time is right to let them rise. Steve Liesman takes a look at the Fed's exit strategy and the tools available to policymakers.
Let's take a look inside the Federal Reserve's toolbox that it will use when it tries to normalize interest rates. A lot of background discussions going on at the Fed over this. Why? Because its main tool, the Fed funds rate's not going to work. During quantitative easing, the Federal Reserve bought all these securities and put all this cash out into the system. In order to control interest rates, the Fed has to control the amount of money in the system. So Fed funds rate goes away. What else does it have? Well, it's got this big thing. It's really an axe. It's a huge thing. Interest on excess reserves. Effectively, the Federal Reserve is going to pay the banks in order to keep that money on account at the Federal Reserve. Now, if that doesn't work, what else does it have? A thing called a reverse repo. I know it sounds complicated, but we're going to have to get used to these terms when interest rates normalize. A reverse repo, the Fed lends out a security, again, soaks up cash for some period of time. Could be overnight or could be as long as a week. And yet, folks, there is more. The term deposit facility, think of it like a certificate of deposit at the Federal Reserve. Could be something like a crowbar on interest rates if it works. You put your money in the bank, in the Federal Reserve for a period of time, the Fed pays you an interest rate. Finally, if all else fails, the Fed has a thing, the size of the balance sheet. It could actually sell assets for good. Sell the assets, soak up the cash, essentially retire the cash. So that's what we have inside the Fed's toolbox that hopefully sometime next year, if the economy is going well, the Fed will begin raising rates and use all of these tools in order to keep interest rates or normalize interest rates. For Nightly Business Report, I'm Steve Liesman.